talking about the financial markets kind of melting down because of the Trump tariffs and stuff. Let's talk about Bitcoin because that's kind of the main thing that at least this podcast has been focused on. And Bitcoin's actually held up fairly well, relatively speaking, all things considered. I mean, it's definitely held up a lot better than other cryptocurrencies like, Ethereum, Solana. Those have just gotten completely destroyed. But Bitcoin's actually holding fairly well despite the Trump tariff threats. It did drop from like 87, 86K all the way down to 81 something earlier today. But, that's not abnormal for Bitcoin to drop that much in a single day. And considering that it's still above 80K, it's actually not that bad. But with all this, kind of talk about tariffs and, the markets getting nuked and all that stuff, what if we're just overthinking it? Like, what if tariffs, this kind of tariff talk, is only a small part of what's been driving the Bitcoin price at the very least? So this is kind of a theory that I've seen posted by Colin Talks Crypto on X. So these are his charts. Credits to him for putting this together. But what this Xer Twitter person, Twitter channel, Colin was talking about was he actually, this wasn't his discovery, but this is a theory that I've seen, that Bitcoin price is very closely correlated to global M2 money supply. So if you don't know what M2 is, M1 is just cash, like physical cash. Like if you have a $5 bill in your wallet or something. M2 is cash and cash equivalent. So if you have money in your bank account, it includes checking accounts. And I'm not sure if it includes like money market funds and stuff like that, but it's just like, liquid money, but it doesn't have to be physical. It could be in your checking account. So M2 is usually like a really good measure of liquid money supply, just how much liquidity there is in the market. And what people have found was that Bitcoin's price is very closely correlated to the global M2 money supply. So if you add up all the M2 supply that's in the world, that's increase it, and it increases or decreases by central banks printing money or withdrawing liquidity. So if you just add up all the global M2 money supply, it's very correlated to the Bitcoin price. So this is one that's with a offset. So the idea is that if liquidity increases, if M2 increases, it takes a certain amount of time for that liquidity to flow into things like Bitcoin or just financial markets in general. And if you offset the money supply that's already happened by 77 days, you can see this chart that the correlation is pretty high with Bitcoin. But what's even higher of a correlation is if you offset it by 108 days. So, 77 days is just over 2 months, and 108 days is another month away. So we're kind of struggling between whether the Bitcoin price is correlated to the money supply offset by 77 days or 108 days. Again, it's looking like maybe the 108 days ones is it's more accurate because, as you can see, I've included the chart. The 108-day offset does show that Bitcoin is going to drop if it continues to be correlated with the M2 money supply, that there is a drop that's being predicted by the M2. Now, of course, this chart has no idea of the Trump tariffs, right? Like this is all factoring in, this is all not factoring in like any of the tariff announcements that have already happened, because once again, this is offset by 108 days. So this is stuff that's already happened 108 days ago that's just projected onto the Bitcoin price. So we do see that if it's 108 days offset, there is a drop of Bitcoin's price. And maybe this whole tariff announcement was just a coincidence, that Bitcoin was going to drop anyways, regardless of whether there was a tariff announcement or not, because and it drops because the M2 money supply offset by 108 days that dropped. I don't know. This is a theory that I've seen, and by the way, the reason why it's important is because if it does continue to be correlated with the M2 money supply, if it's 77 days, then that means we should be kind of blasting off already, or within the next like week or so, literally. That Bitcoin's gonna just start blasting off, and as you can see from the chart, it's kind of like just pretty much up only for the next 3 months. If the 77-day offset is true, if the 108-day offset is true, then we have to wait another month. Then that means that Bitcoin is probably going to chop for another month, and then May 1st, it's going to be up only. So what do you guys think of this theory, first of all? And do you guys, put any credence to it, or do you guys think that this is just a coincidence? Because the correlation is very high, so I personally don't think this is a coincidence. I think that it actually does matter. But I wanted to get you guys' thoughts on this Bitcoin price correlation with M2 money supply, because this is like kind of the last piece of opium that we can huff. Because like if this doesn't work, then I don't know what's gonna happen, right? Like if it doesn't, if the 108-day offset hits, if it's still like Bitcoin is at the same price as it is by the end of May, then it will suck. Like that's all I'm gonna say, right? And lastly, before I actually pass it off to you guys, I have this chart of this theory of a V-shaped recovery, and this is posted by a user named Cena21st on X. But basically, this is like kind of an idea of how Bitcoin could make a recovery. And Bitcoin is kind of correlated with the Nasdaq, so maybe it could say relatively similar things about the stock market as well, where we already experienced kind of the early parts of the early crash, right? Like the tariffs thing became kind of real, and everybody kind of had a rude awakening to the tariff inflationary shock. But then we had the Liberation Day, which turned into Liquidation Day. And then we had, the bad effects, like people are pricing in the bad effects of the Liberation Day tariff announcement. But then once we get to closer to the bottom, you can see that we just heard a report that maybe Elon will be leaving Doge soon because they've, chainsawed everything that they could. And then now it's like time for the scalpel. But then now it's like, Tesla stock has crashed too much, so Tesla needs to Tesla shareholders are trying to like recall Elon Musk to get him to come back, because the stock is gonna go nowhere without him. And yeah, like there's going to be pressure on Elon to leave Doge, so the remainder of the spending cuts won't be substantial, and that might actually be a good thing for the market, because the market is like, oh, we don't have this crazy guy who's like cutting everything, and now we can maybe have some parts of our government that Doge won't like completely just cut half the employees and stuff. And then we have the Fed. I talked about the Fed rate cut earlier. Now there's like a 1/4 or 1/3 chance of a rate cut, 25 basis point rate cut in May. So maybe rate cuts will be resuming soon. And then after that, we get some certainty around the tariffs, and then we get maybe a dovish Jay Powell, and then we get a little bit of sideline money flooding back in from institutional investors. And then in May or June, we're going to start to hear news about the Trump tax cuts, which is probably going to be good. And assuming that oil prices don't just like skyrocket, which if there's recession fears, oil is probably going to go down, right? So assuming that oil prices continue to go down, then inflation is going to get less, right? There's going to be pressure relieved from inflation, which gives the Fed even more leeway to cut rates. And then you have all these, Congress might finally get their act together closer to the end of summer to pass some deregulation bills. And the debt ceiling thing eventually is going to have to be negotiated, but maybe we get a resolution on that. Probably going to kick the can down the road again, right? Like as they always do. So once we get those pieces of news back, then perhaps we get a little bit more certainty. A dovish Fed, liquidity is going to go up, and Bitcoin's going to make new all-time highs again. So at least that's the theory. I know it doesn't. I know it seems like just I'm huffing total hopium because we're maybe hopefully we're at the bottom, but I don't know, right? But we've certainly come down a lot. So what do you guys think of all of these, M2 theory, M2 global money supply theory, and all these, this graph about the V-shaped recovery? Do you think it's going to happen? And yeah, just your opinions on where the market is headed in the next, remainder of the year, let's say.
I mean, I'm a firm believer that Bitcoin only moves one way or another because of global liquidity for the most part. I don't think it's only global liquidity. There's a lot of other things that are going on in the market and why people are buying things, and it also has to do with the fundamentals of Bitcoin. But fundamentally, like Bitcoin is either like very correlated with liquidity or it's very uncorrelated. And like there are times where Bitcoin becomes very correlated with the Nasdaq, which means it's also very correlated with M2 money supply. So I think we're definitely in a time period where we're very highly correlated with the Nasdaq, which means that if like money starts to print and M2 starts to expand, the Nasdaq should expand, which means that Bitcoin should expand, and that's kind of what I'm expecting to happen coming soon. I think that the chart, I don't know if Bitcoin is going to follow the chart that perfectly. My feeling is that we're going to blast off when like hedge funds decide they have enough certainty in the market to start deploying capital that they have been planning on deploying anyways. Like a lot of these institutional investors will like deploy capital on a quarterly basis. And basically what we've seen is a lot of capital got pulled back during the Trump bump in November. And generally when that happens, it means that there has to be a market correction. And the what causes the market correction is usually the market's looking for uncertainty to decide to sell. They're looking for reasons to sell. So Trump gave them the reason to sell with the tariffs. I do agree it's connected, but like if there were no tariffs, it would have been something else, like the debt ceiling. Like institutional investors would have found a way to like fled to safety, waiting for certainty in the market to return so they could make money after the Trump bump kind of dissipates. So that's kind of what I think. Is I don't think it's gonna be this deterministic based on the chart. I think any day now, institutional investors are going to start deploying capital away from bonds and towards equities, and that's usually when Bitcoin starts ripping pretty hard. And that's kind of what I think is going to happen. But like I think it's credible information. Like you're clearly seeing like a model here where Bitcoin is impacted by global liquidity, and there clearly has been a drawdown of global liquidity in the last couple of months that's probably impacted Bitcoin, and it's perfectly correlated to the impact that's happened to a lot of stocks, including especially risk assets like Nasdaq stocks. The second chart I think is way too deterministic for me to take it seriously. Sorry to the author of the chart. I think that the majority of the things that he's writing here are like this. The market does not trade on this level of certainty. Like I just don't believe that. I even think some of the things that are posted in the chart are just flat wrong. Like if Doge was toothless and had no substantial cuts, I think that'd be horrible for the markets. I actually think Doge is one of the things that's driving expectations for yields down. So if you like take away this expectation that like Elon might be able to like bend the curve on spending, I'm not saying he's going to balance the budget, but bend the curve, like make a difference. That's like that somebody can report on in the Treasury Department. If that doesn't happen, that's really bad, I think, for global liquidity. I think that actually brings a lot of uncertainty to the market. I don't think it's a good thing if Elon fails. I think that shows that's data for the American public that like paying off the deficit is like never going to happen, and that's like enough data for people to start making other long-term financial decisions. So I think that the idea that like the Fed, the U.S. government's never going to make any progress on paying off their debt is good for the markets is just absurd. That's personally what I think. So I don't think that's the case. But I do believe that like where a V-shaped recovery is in the cards. So the chart is the picture is going to be right anyways because a V-shaped recovery is always in the charts when you have this kind of options reversal and you have this kind of uncertainty introduced in the market. Generally, when the market comes back, it comes back pretty strong. And I think that the setup for like lower rates, lower inflation, and Trump ending the uncertainty is actually a pretty good setup. It's just I guess this is the last big trade thing he wants to do. He's done with Mexico and Canada. He's moving on to Europe and China for the most part right now. We'll see where he gets with that. But overall, yes, I do believe the global M2 is improving, and I do believe that's going to be very good for Bitcoin.
Yeah, and just to add to that, I forgot to include the chart in the docket, but there's also one thing that we should watch called the dollar strength index, the DXY or Dixie, as some people call it. And that measures the US dollar's value against a basket of other major global currencies. Basically, the higher the index, the stronger the US dollar is relative to other currencies. And one of Trump's goals is to make the dollar weaker so that he can export more stuff, right? That's kind of like part of his tariff strategy. And the funny thing is global M2 money supply, that's represented in US dollars. So if nothing else changes and the Dixie falls, which is what Trump wants and what he's trying to actively achieve, then M2 will rise, just like everything else being equal, right? Like just if the Dixie falls, nothing else needs to happen for the M2 to rise. Of course, like everything else is happening and other global or the central banks around the globe, they are printing money still. So that also does help with the M2. So I think that M2 is going to go up, and I think that that's going to, and it has been going up, right? If we just look at the charts. So I think that that's going to be good for Bitcoin going forward, where, the US dollar is going to fall. And global central banks all around the world are going to be either cutting rates or printing money or both. That's my opinion. Does anyone else want to chime in on what they think of the M2 stuff that I talked about?
Yeah, I want to jump in here on M2 because I think it really is just a big factor with fiat currency that more money, there's not more Bitcoin. So the more money there is, the more Bitcoin can run up in price because, again, we can't generate more Bitcoin than what there's currently being generated and what is currently in the mix. So that's really, really why it can basically be whatever price, like the dollar value of Bitcoin doesn't really matter. It's basically just being determined by how much people want it and how much people don't want fiat. And I would say that there's going to be a lot more people are adopting. I mean, we can see it from all the news that we've had. There's been a lot of adoption of Bitcoin in general, and like there's been way more willingness to use it and have it as a major currency and a reserve, like kind of being put into reserves as well. So I would say that the idea that the growth of the money M2 supply, and especially because of the fact that Bitcoin is global, right? So that's I feel like that's why the global M2 supply is much more indicative of the growth of the price of it, because at the end of the day, I can buy it in Canada, someone else can buy it in Hong Kong, someone else can buy it in Ireland. Like there's no borders that are determining what currency is going into it or being exchanged for it. So the more money that's in the mix, just in general, the more is out there that can be used to purchase Bitcoin. So I think that's kind of where I'm seeing it. It makes sense that it would be relatively correlated. We'll see about the blast off point if it actually happens, because I feel like I've been counting down the days for a blast off point for months now. So if it could have done it, 3 months ago, that would have been great. But alas, hopefully this is an indicator that we are about to start moving back up again. Especially with the additional rate news, given that there's a significantly higher chance of a rate cut than there was previously. We'll have to see what Powell says, given that he already betrayed me in December. So I don't know what's going to happen, but hopefully it'll be positive news across the board. Yeah, I think we're like, it feels like we've got everything set up for a good Bitcoin run. It just hasn't happened yet. So instead of sitting here patting each other on the back and being like, yeah, man, we did great. Good on you, man. We're sitting here going, why? Because all we've done is watch ourselves grow in December and be like, yeah, it's like vindication. I know what I was talking about. And now it's like sitting here, a few months later, like looking at your portfolio being like, what have I done? So hopefully we can get back to the celebration once more, with the Bitcoin price returning its upward trend instead of bouncing around on, if sat there, bounced around on 95-ish K for like a month and a half. Now it's bouncing around in the 80s. Like, come on, man. Let's sit back up there. So that's kind of where I'm at.
No, I totally get what you're saying there, Tristan. I just think that like most of like 80% of investing is literally just managing your emotions, right? Like when stocks and Bitcoin goes up, like it doesn't mean that you're a genius. And when stocks and Bitcoin go down, it doesn't mean that you're a failure, right? Because maybe like, and this is partly my fault too, like I should have been watching the global liquidity index more closely in retrospect. And I will watch it very closely going forward. I feel like, all this time, all this, kind of frustration that we've experienced over the past few months, and all the jubilation too when it was going up, maybe it was just tracking global liquidity all this time, right? Like we were celebrating over nothing. Like we're celebrating that we were geniuses when in fact it's like it went up because global liquidity went down. And then now we're like lambasting ourselves for being idiots. When all that's happened is that the global liquidity went down. Like maybe we're too nice on ourselves when it's going up and we're too harsh on ourselves when it's going down. So I feel like in retrospect, this is kind of my conclusion over, just kind of watching my portfolio over the past, few months to a year. But yeah, anyways, I've spoken a lot. Amber, it's your turn to chime in.
I like both in the graphs and just logically more money, like more liquidity makes sense that it would increase the price of Bitcoin. It just looking at it though, it's clearly like it reaches a certain point where there's really a gap in the correlation. And so the question is like, is this gap something intrinsic? Like, is there sort of a level where once Bitcoin reaches, at least right now, investors are not willing to spend that much more? I will say, like, I haven't been investing in Bitcoin for a long time, so I don't have the emotional attachment. Or I'm saying I'm still very new to all of this. But I would expect that Bitcoin, just looking at it, I would expect it would go a little bit up. I think really the big threat is that whether or not there is something that undermines the value proposition of Bitcoin as an investment asset to anybody looking to use their liquidity. And I don't know where they would throw their money right now. So yeah, that's where I am.
To be a proper Bitcoiner, I just want to point out your comment, Andy, where you said that like now you're wondering whether like your successes of investing are just related to global liquidity. And I think that from a Bitcoiner standpoint, that is always the case. All investors are successful because they think that they're making all the right purchases of assets, whether they're homes or stocks, but it's actually just related to global liquidity going up or down. And like, yeah, like there's a lot of people who are like, I'm a genius. I started investing in 2008 and I'm killing it. I'm like destroying my parents' returns that they got with the same age. It's like, it's also when global liquidity went through the roof. So that's what happens. I'm just pointing that out, that like your feeling is actually true for everyone that's involved in investing.
Yeah, and I just hope it continues the correlation, right? Like in the back of my head, like everything makes sense, right? Like when I think about it, but in the back of my head, there's always that like small fear of everything. Even like I'm a deep believer in Bitcoin, just like everyone else who's a Bitcoiner, but in the back of my head, I'm like, okay, what if like this is the one time when I need Bitcoin to go up the most, where liquidity goes up and but Bitcoin just somehow doesn't, right? Like I know it doesn't make sense, and there's like probably I feel like a less than 1% chance of that happening if like M2 totally takes off and just Bitcoin just continues to do nothing. But yeah, it's just again, I feel like it's managing emotions, right? Like I said earlier,
Yeah.
where yeah, you just got to hang in there, and hopefully, if the 108 days is correct, then we should be blasting off May 1st. But maybe the 77-day offset is not dead yet, because we didn't drop below 80K, even though the news around the tariffs was really bad, and Bitcoin's actually holding up well. But yeah, hopefully we get some positive movement within the next month or so.